The MyFreeTaxes Self-Employed Guide, Tax Preparation for Gig Economy Entrepreneurs, sponsored by MyFreeTaxes and the United Way. The information contained here has been prepared by Civitas Strategies Early Start and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies Early Start team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. Welcome to the MyFreeTaxes Self-Employed Tax Guide for Gig Economy Entrepreneurs. In today's video, we will discuss key tips that will allow you to self-prepare your sole proprietor business taxes. Part 2 of the guide focuses on filing your return online. Through MyFreeTaxes, you can use TaxSlayer free of charge. Unfortunately, due to statutory limitations, VITA volunteers cannot prepare your business taxes for you. To help you do them yourself, we created the second guide, the MyFreeTaxes Self-Employed Tax Preparation Guide. This guide walks you through self-preparing your Schedule C step by step using the TaxSlayer online software. In this short video, we'll walk you through the use of the guide and highlight key tax topics for your business type so that you can self-prepare with confidence. You may feel a bit intimidated by the idea of doing your own taxes for your business, but this guide will help you have a hassle-free experience that can save you money, minimize the risk of audit, and help you set goals to improve your business practices for many years to come. You'll come out of tax season more confident about your return and your understanding of it. It's best to use this guide as a reference while you're preparing for and completing your tax return. The goal of this guide is to allow you to accurately report your business revenue and expenses while claiming important deductions. This guide is primarily focused on helping you complete your Schedule C, which is the portion of your tax return where you report your business income and expenses. If you need assistance with other parts of your tax return, you can access assistance at myfreetaxes.com/support. This roadmap that you see displayed lists the steps in your journey to file self-employed taxes using MyFreeTaxes. Most of the guide is straightforward with how you enter your revenue and expenses. However, in this video, we'll be discussing certain key topics and guidance on entering them into TaxSlayer for gig economy entrepreneurs. Those key topics are entering your self-employed income, including understanding your cost of goods served, car and truck expenses, and the business use of home. When you access MyFreeTaxes, you will be asked to choose how you want to file your taxes. You may choose File My Own Taxes or Have My Taxes Prepared for Me. For this guide, we use the File My Own Taxes option because many small business owners are not eligible for the Have My Taxes Prepared for Me option. While in the software, you will be directed to enter your business's income. This will be your gross income, so you will need to add up all your cash receipts, 1099 forms, and any other payments that you received. If you enter your information on the worksheet provided in Part 1 of the guide, you can just enter that total, or if you have an accounting system, you can get that total from there. You will be directed to enter your business's income. This will be your gross income, so you will need to add up all your cash receipts, 1099 forms, and any other business payments that you received. If you entered your information on the worksheet provided in the guide, you can just enter that total. Or if you happen to have an accounting system, you can get that total from there. Remember, if you work multiple unrelated gig types, you will need to complete a Schedule C for each gig type. For example, if you perform rideshare and also freelance writing, those will be two separate Schedule Cs. However, if the gigs are related services, but through different platforms, they can be combined. For example, driving for both Uber and Lyft would be considered the same business and would be on the same Schedule C. After entering your business's income, you will move on to the cost of goods sold guide. Cost of goods sold are ones that are used in the creation of something you sell, which is why this is also known as the cost of sales. For example, if you had a craft business, this could include fabric, thread, and similar items. Cost of goods sold is considered a business expense, and it does not count toward your gross revenue. This can be a common entry for some businesses, but for others, it can be a red flag. If you do create a product by combining materials, you'll also want to include your cost of goods sold. Some common cost of goods sold are the cost of materials, including the shipping to your business, but not you shipping to customers. Inventory for resale, packing and repackaging, labor in producing goods, utilities and rent associated with a manufacturing location. Cost of goods sold is important because it is deducted from your gross income prior to applying other deductions. There are many businesses that use cost of goods sold. Some examples of businesses who should use cost of goods sold include a business owner who prepares artisanal food for a local grocery store, a crafter who sells products on Etsy, a business owner who buys products on Alibaba and resells them on eBay, a CBD store owner who repackages products for sale in their store, an entrepreneur who grabs bargains at the local thrift store to sell them online, a mechanic who keeps parts for repairs, a construction business owner who has nails, wood, and flooring in storage, and a pizza shop that purchases ingredients to make and package food. If any of these scenarios are like yours, you will likely use cost of goods sold. If you do report cost of goods sold, you need to fill out all the lines you see here. So how do you do it? Inventory at the beginning of the year is the inventory, which is the cash value of products you had on hand at the start of the year. Purchases are the amount of all purchases for raw materials and merchandise for resale that were made by the business during the tax year. This generally refers to pre-made items that you do not have to do much to get to the final product to be sold. This amount should not include any amount for purchases or products that were consumed by any owner of the business for personal consumption. Labor is the wages that are paid to employees who spend their time working directly on the product being manufactured or mined for sale. So, these labor costs must be directly tied to production. Materials and supplies are the costs of all parts, raw materials, and items used to build, create, or resell a product. Other costs are items such as shipping from a producer to you or the costs of a manufacturing location. And finally, the inventory you had at the end of the year is the amount of all finished or partly finished goods, raw materials, and/or supplies which were acquired for sale or were physically part of the merchandise intended for sale at the end of the year. The next topic we'd like to discuss is entering your business car and truck expenses. For your mileage, make sure you keep track of the day, purpose, and total miles because you will need to enter that information for this deduction. If you use a driving app for work, you can likely pull a report of your trips that includes your mileage. However, you decide, your log can be simple. Next, you will need to determine if you are using the standard mileage deduction or actual expenses to claim your business vehicle expenses. The system will guide you to the appropriate method based on whether you own or lease the vehicle and the methods that you previously used in past tax years. In general, standard mileage is usually better if you drove a lot of miles. This will get you the miles driven multiplied by the IRS mileage reimbursement rate. Actual expenses might get you a bigger tax break if you had higher repair, gas, and insurance expenses for the year. With actual expenses, you need to keep track of all payments associated with the business use of the vehicle, including car loan payments. If you are using standard mileage to determine your vehicle deduction, you will enter it under car and truck expenses. In order to calculate standard mileage, you must enter the business miles that were driven during the tax year. Be sure to have documentation of the business miles driven for your records and in the event you are audited. The system will apply the standard mileage rate to your business miles driven to calculate your deduction. Remember, you can also claim the business portion of car loan interest, parking fees, and tolls paid. To claim those expenses, you will enter them as other expenses once you get to that screen. As noted on the screenshot above, if you are using actual car or truck expenses, you will enter those expenses under depreciation. If you are claiming actual business car or truck expenses, so not using standard mileage, you will be able to depreciate your vehicle and claim your actual expenses for the year under the depreciation screen. You will need to enter some information about the vehicle, such as the date it was placed in service, which is the first time you used it for business purposes, the original cost, and the percentage of business use. Unless you have a dedicated vehicle used only for business and not at all for personal use, this figure will not be 100%. A simple way to calculate your percentage of business use is to track your total miles driven and the total business miles. You will divide your business miles driven by your total miles to get the percentage of business use. For example, if you drove your vehicle a total of 12,000 miles during the year and 4,800 miles were for business use, your business use percentage would be 4,800 divided by 12,000, which equals 0.4. You will multiply 0.4 by 100 to get 40%. You will then input the amount, if any, of Section 179 deduction that you will take on the vehicle, and then indicate if you claimed any special depreciation on your vehicle in a prior year. These are both faster ways to depreciate eligible expenses. For a better understanding of these depreciation topics, view our resource, What is Depreciation? Under listed property information, you will select the type of vehicle that you are depreciating. After you select the vehicle type, you will be prompted to enter your actual expenses. Actual car expenses may include the following: licenses, lease payments, registration fees, but not plates, gas, insurance, repairs, oil, garage rent, tires, tolls, and parking fees. So, you will total up all of your relevant receipts and enter your total car expenses in the actual expenses box. Once you've entered all your business assets, you will move to the depreciation questions, where you will answer each question that applies by checking the corresponding box. You will answer the questions only if they apply to your situation. Note that the business income limitation will be pre-populated with $1,050,000, which is the maximum Section 179 expense deduction allowed. Most self-employed businesses will likely not exceed that figure. The next topic we'll discuss is the business use of home. Keep in mind that you can deduct space in your home used exclusively for your business. This can include a home office, even if it's just part of a larger room or a storage area where you keep your supplies for your business. Sole proprietors may use part of their home in their business. For example, if you're a virtual assistant, you may have a home office. You can also count space used for the storage of inventory or product samples. The first and most important thing to consider is if the space in your home is exclusively used for business. That means it is used only for your business. If the space is partially used for business and partially for personal purposes, it will not qualify. The IRS provides two options for deducting the business use of your home. You can use the regular method, which accounts for all the actual expenses associated with your home, or you can take a simplified method where the deduction is based on a set rate from the IRS if you're using 300 square feet or less of space in total. If you regularly use your home in your business, you can deduct the cost of your home and other related expenses. You can do this in one of two ways: the simplified home office deduction, which is a maximum of $1,500, or by applying your business use of home percentage to your actual expenses. More on this topic is covered in detail under How Do I Include the Costs of My Home in Part 1 of the MyFreeTaxes Guide to Filing Self-Employment Taxes. To prepare for claiming these deductions on your return, whether you rent or own your home, there are two steps you need to take. Step 1, determining the space used for duties related to your business, and Step 2, determining the allowable expenses related to your business use of your home. You will first need to indicate if your home was used for childcare. Unless you are a childcare business, this will not apply to you. Next, a simple calculation will be performed to understand what percentage of your home is used for business. To get this, you will need to enter the amount of square feet you use for business or for storage of inventory and the total square footage of the home. Next, you will begin listing home expenses associated with your business. You will be asked to enter direct and indirect expenses. Unless the expense is related to 100% exclusively used business space, such as storage of inventory, you will enter the expense as indirect. For direct expenses, enter 100% of your expenses. For indirect expenses, enter 100% of the expense, and they will be multiplied by the business use of home percentage. Business owners should be mindful that because you may choose to enter certain expenses like utilities and repairs under home office, you will not enter those expenses again when you see those categories listed separately as itemized Schedule C deductions. In this next section, excesses and carryovers, you will only enter information if it applies to your situation. You will then be asked about the depreciation of your home. This is only applicable if you own your home. After you enter details about your home, such as the date first used for business and the smaller of its adjusted basis or fair market value, the system will depreciate the expense and provide you with the deductible depreciation amount for it. There is a separate category in TaxSlayer, depreciation, where you can depreciate other large purchases that are not subject to your business use of home percentage. Next, you may see the Schedule A adjustment screen, which will show you what your calculated business use of home percentage is and the deductible mortgage interest and real estate taxes you have based on your business use of home. You will then be taken back to the Schedule C summary page. There, you can go back and edit previous entries or move on. You've done it! You just entered all the information needed on your business and can now complete the rest of the screens to complete your overall return. Many small business owners can self-prepare their tax return to save money and ensure their taxes are being done accurately. No one knows your business like you do. The key to hassle-free tax filing is to have proper record keeping and bookkeeping throughout the year. Keeping track of all payments you receive and receipts and invoices for your purchases is invaluable and will save you a lot of time. When it's time to submit your taxes, submitting electronically is far better than printing and mailing your return. This is because there's a higher degree of accuracy and the process is much quicker. You may find that you need more time to file or that you have a tax bill and need more time to pay it. If that happens, we suggest that you pay what you can and then request an extension. You will need to put in the request by April 15th, but you can receive an extension for up to 6 months. You will still have to pay additional penalties for not paying any taxes you may owe on time, but that will be better than ignoring it altogether. There is no financial penalty for filing an extension, if you need more time to file and are owed a refund. Additional resources and assistance is available through MyFreeTaxes. Visit the MyFreeTaxes support page at myfreetaxes.com/support. There, you can receive assistance from IRS certified tax specialists via phone, email, or live chat. Review our searchable, frequently asked questions for quick answers to common questions. And review additional filing guides and training materials. Thank you.